This is The Bottom Line. The Bottom Line on 938 Live.
Now, Alibaba is expected to start trading its shares on the New York Stock Exchange later today after the Chinese e-commerce giant priced its IPO at $68 a piece. Now, that is the top end of its expected range. At that price, the IPO deal would be worth nearly $22 billion. That is one of the world's largest ever IPOs. And it's easy to see why there is so much hype surrounding it. The internet giant handles more transactions than Amazon and eBay combined. Its revenue grew by a whopping 52% to $8.4 billion in the year ended March. To talk to us more about this from the US, joining us is Nicholas Colas. He's Chief Market Strategist at ConvergEx Group. Good morning, Nicholas.
Good morning.
Now, Nicholas, the price of Alibaba's IPO fixed at the top end of its price range between $68 and $68 a share. What do you think this says about the stock?
Well, it does appear that there's a very broad base of demand for Alibaba shares because in addition to pricing at the upper end of the range, the underwriters, the investment banks that helped take the company public, were able to increase the range. The original range was 60 to 66, and now we're talking about a stock pricing at 68, so it really does highlight the strength of demand for the shares.
So do you expect a sterling performance on its trading debut?
You know, we actually surveyed our customers who are institutional investors on exactly that question at the beginning of last week and found that on average they expect the shares to rise between $5 to even as much as over $10 over the course of the first day of trading.
Now, we all heard about Facebook's IPO in 2012, and it was short-lived. Will Alibaba's trading debut follow in Facebook's footsteps, you think?
Well, you certainly are touching on exactly the same question that American investors are wondering. Very large transactions, such as Alibaba or Facebook, tend to be difficult for the market to keep track of, simply because so many shares trade. So I think we'll all be holding our breath a little bit tomorrow as Alibaba opens for trading to make sure that it does actually trade consistently and accurately over the course of the day. But it is an open question.
Now, with the huge IPO proceeds, how can Alibaba use the funds to propel its growth forward? What exactly should it be doing with those funds?
Well, there's a couple of different things that companies who go public tend to do with their shares and with the proceeds once they go public. The first is obviously take some of that cash and invest it in their business, and that is definitely one use of proceeds. But very interestingly, a lot of public companies use their shares to make acquisitions as well. And if you look at any of the IPOs in technology over the last few years, all of them have used their public market stock to make acquisitions above and beyond what they can afford with cash. So I would expect to see Alibaba do some of that as well.
Thank you very much, Nicholas. Nicholas Colas, Chief Market Strategist at ConvergEx Group in the US. Thanks for joining us on The Bottom Line, brought to you by Turkish Airlines, Europe's best airline.